you remember last cycle, there was 3 breakouts, really. Well, 4. One was Luna, that went. 3 breakouts. One was Solana, one was Avalanche, and the other was probably Polygon. Now, who was the winner? Well, the one that got the most adoption ended up being Solana. It was the one that came from the bottom down 97.5% from this cycle, like ETH was the previous cycle. It's gone into now accepted as an adopted ecosystem at scale. Who's the next one? Who's the next Solana, the next ETH of this cycle? That's where the real money gets made. Because those first cycle, you've got nothing to compare it against. You can't say, oh, it's already up 5x versus its all-time high. You've got nothing, just blue sky charts. And I'm very interested in what that's going to be. I've got 2 or 3 ideas what it might be. Listening to people like Chris Beniski, Melton Demirez, seeing what I've seen with stuff like the Sui Foundation, I go with the thesis that there are 2 ecosystems that are probably going to be in the race here. The layer 1 race, the big adoption, because layer 2s is a different conversation. I think it's the Move protocol. That's the Sui Aptos, may the best man win kind of game there, because it's different, it has a lot of different use cases. And then there's Cosmos, Celestia, and others.
Raoul Pal says 2 crypto ecosystems are racing to become the next big players in the current digital asset market cycle. Paul says he's looking to find out what the Solana of the next bull market will be, or which crypto asset will experience the same parabolic rise and wave of adoption that Solana has seen over the past few years. He's interested in 2 main ecosystems, blockchains that use the Move programming language and those that use Cosmos, Atom. The most well-known altcoins that use the Move language are Sui and Aptos, while one of the largest emerging cryptocurrencies that use the Cosmos SDK is Celestia. There are 2 ecosystems that will likely be in the race to Tier 1 mass adoption. Layer 2s is another conversation. He believes it's the Move protocol, the Sui, and the Aptos. It's a game where the best wins because it's different and the use cases are so varied. And then there's Cosmos, Celestia, and others. This seems like the game to play. Maybe Avalanche. He got it last cycle, but it doesn't seem to be getting widespread adoption. It's more in that lower tier. According to Raoul Pal, this is your time to pick the next Solana and make a lot of money. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
The entire thesis is this market is going from 2.7 trillion to, call it 12 trillion this cycle, to 100 trillion by maybe the end of the 3032 cycle.
Wow.
Okay. That's just that log adoption curve that I showed you with the internet. It backs out, same numbers. Same numbers if you back out the logarithmic regression channel of Bitcoin, right? You get to these numbers. So this is, I think, in front of us, the largest, fastest accumulation of wealth in all human history. I know it sounds bananas now, but when you double, we double a 2.7 trillion market cap, 5, whatever. But once you double a 12 trillion at the peak of the cycle, it's 25 trillion. Double it again. Okay, these numbers start getting la-la land. That's exponentials for you. So you need to capture the 2 parts of this equation, which is the network layer, which is where that value really gets accrued, and the applications layer. The applications layer is twofold. One is some of it's tokenized, and other is the equity layer. You guys have a VC firm, so you are capturing a lot of the applications layer. And all I'm trying to do here is capture that.
Cutting-edge Layer 1 blockchain solutions, Sui, which offset the existing challenges of network congestion and slow adoption in the blockchain space, have been gaining traction in recent weeks. Specifically, the Sui network processes a staggering 297,000 transactions per second, with a transaction finality of 390 milliseconds. Sui's incredible results are due to its dominance in the decentralized finance space. It is currently among the top 13 DeFi chains ranked by volume and also among the top non-EVM chains. In addition to this on-chain growth, the network has seen many high-profile collaborations with companies like BytePlus and cloud giants. One of its notable achievements in recent times is Grayscale's decision to launch a Sui fund. After observing the network for a while, Paul revealed that it is highly scalable. This implies that it can bridge the gap between Web 2 and Web 3 and onboard billions of users. Paul boldly predicts that the global cryptocurrency market will skyrocket to a staggering $100 trillion market cap. Paul shed light on how things like cryptocurrencies and technology stand out in secular trends, especially those that ride the wave of adoption. In particular, he noted that this growth rate is twice as fast as that of internet adoption by making a comparison between the number of active crypto wallets and internet IP addresses. It is crucial to understand that Paul's estimate of $100 trillion market cap is primarily dependent on the adoption rate that the industry is expected to experience. The growing number of cryptocurrency users has strengthened his argument for a massive surge in the value of the cryptocurrency market. Along the same lines, during the interview, the financial guru strongly warned against unnecessary investment risks, a point worth noting for all enthusiasts dipping their toes into the cryptocurrency water. Paul boldly asserted that the focus should be on exploiting investment opportunities rather than getting caught up in tribal or philosophical disagreements. Expanding on this view, he highlighted that with the growing potential of the cryptocurrency market to reach a market capitalization of $100 trillion, there is virtually no need to take excessive investment risks. The antidote for investors, according to Paul, should be to coordinate opportunities with risks, adopting sound portfolio management strategies to make the most of market gains. The current market liquidity cycle could potentially extend to 2025. Since the tumultuous year of 2008, global liquidity has experienced a clear cyclicality. Amidst discussion on the subtle intricacies of his so-called the everything code, Paul asserted that the current market cycle is primarily driven by the expansion of market assets such as stocks, cryptocurrencies, and technology. He noted that the global liquidity cycle generally focuses a discernible pattern that influences economic activities. He further cited numerous factors that could impact the cryptocurrency market cycle, including the upcoming U.S. presidential election and likely interest rate cuts by the Federal Reserve. Paul mentions that he plans to take some profits towards the end of the year, anticipating that prices will be higher by then. By doing so, he ensures that he makes some profits without being overly reliant on market fluctuations. This strategy is particularly useful for meeting personal financial needs while participating in long-term market growth. Paul highlights that the approval of Bitcoin and Ethereum spot ETFs has already reduced market risks, paving the way for unprecedented growth. He predicts that the value of Bitcoin could soon surpass $200,000 per coin and potentially reach $1 million by the end of the bull market. In the current market scenario, Paul advises investors to consider selling cryptocurrencies during the peaks of the 2024-25 bull market to preserve their profits. He highlights the importance of established positions and institutional adoption of Bitcoin and Ethereum. However, he warns that emerging cryptocurrencies like Solana require careful evaluation due to their volatility. Diversifying portfolios and staying on top of market trends are essential for a successful exit. Paul believes that the best approach to investing in the cryptocurrency sector is to have a long-term time horizon and ride the wave during the ups and downs. For those without pressing financial needs, a long-term buy and hold strategy is optimal, recommending holding investments until at least 2030. Meanwhile, Plan B suggests timing the market based on Bitcoin halvings, buying 6 months before the halving and selling 18 months after. Historically, this strategy would have yielded better returns than a simple buy and hold approach, by avoiding severe declines in bear markets while still enjoying gains in bull markets.